Good afternoon, everyone. It's 1 minute to noon. Could clear my throat. Coming on a little bit early. It's 3 days before Valentine's Day, so hey, I got the red shirt on, a red scarf on. Nobody on yet, so I'm just gonna hang out here and wait for folks to trickle in, and rather than go into anything substantial, I'm just gonna sort of like work online with anyone that happens to be on. And you know what I like to do? My favorite thing to do is to look at the 52-week high list, right? And that's like, this is, I told you last week, like this is where you should get your ideas. I'm getting like this message. Google comes to bypass access your screen. Well, what are you doing? I guess okay. I think I did the right thing. Just gonna hang out for a bit and let folks trickle in and just kind of like chit chat. I've got the comments on. Fannie Mae, what's going on? Let's see. Fannie Mae. Yeah, I'm not seeing anything. It's at like a little bit under 7. But let's just see. Like, this is like, what people are buying, folks. Let's sort this by market cap. I mean, some of these are so tiny, I would never go anywhere near these. Like, this is $125,000 company. Like, no way, I'm not touching that. But let's see, what are people bidding up today? I don't really know most of these companies. I mean, some of these are micro cap. I know Vision Marine. This is a company that is in the business of selling boats, I believe. This is that's the 52-week low list. Never mind. I was like, that looks super odd. Okay, we were looking at 52-week lows. All right, we might as well just look at 52-week lows and see like what are people selling today? In other words, this is the stuff that's on sale today. Yeah, in other words, people are like, I don't want this. Get this out of my portfolio. Get it out of here. Get it out of here. I can see some old companies that we have been in. Vision Marine, it was an IPO or maybe a SPAC. I think like, oh God, we may have been in that. Life Cycle, yeah, we owned that at some point and took a big loss. What else is being sold? A lot of biotech, a lot of small biotech. We used to own this one, Wissa Technologies, took a big loss there. It's far lower. What else? This Caribou Bioscience at some point was a super hyped up stock. I don't think we ever owned it. GoPro, I've recommended that, and we took a loss there too. And yeah, I mean, GoPro just like, I mean, people still buy GoPros, but like they've just never been able to put together like a series of quarters that would get stock investors to buy in, but they should sell themselves to somebody. Ain't gonna go anywhere. Seritage used to be a Warren Buffett company. This is the company that took over all the real estate from Sears. Those of you who are young would not know what Sears is, but Sears used to be a very large department store that used to own real estate, valuable real estate all over the country. And that all went into Seritage. And at one point, Warren Buffett owned some of that. Here's Nova, which we owned for a while earlier last year. Yeah, the whole new energy space is like, no. Yeah, I mean, there's just nobody wants to own it. I think it's still over-owned from the last bull market. And it's one of the things that I think as investors is really hard is that like we look back, right? And people like, like what about, the stuff that did really well? And the thing is that there's oftentimes a long hangover after a really big bull market. And the hangover in new energy is not good. What else? Let's see. I don't like to buy stuff off the 52-week low list unless like it's just been smashed hard for a long time, and where I like I've known the business for a long time, and I'm like, okay, uh, when at this point this is just too low. We've owned Fulgent in the past, and we own other businesses in that area like Natera and Garden Health. But Fulgent, yeah, making 52-week lows, not a good thing. What else here? We briefly owned this one in, I think it was gold tier or maybe diamond tier, Amphastar. They're a supplier of APIs for pharmaceutical ingredients. I can forget what the A stands for, but it's um, ingredients that go into pharmaceuticals, and they are one of the biggest suppliers in the world for insulin. Yeah, here you can see Sunrun. Why'd you do that? It refreshed. Let's go back, sorted by. We used to own Sunrun a long time ago. At some point, I believe we made money in that. So that one is there. Where is that? It's Fulgent, where we run Sunrun. Yeah, we're talking about Amphastar Sunrun. This is one we own, Idea Biosciences. And I'm so torn with this one because it had a huge run last year. We put it in. I even wrote a couple of Substacks about it. I made a YouTube video about it. I made a 52-week high late last year. And since then, it's just been a straight line down. Nothing has particularly changed for the company other than it's a clinical stage biotech, which clearly people are selling and not buying this year. We sold out of pretty much all of our clinical stage biotechs, but this one has 2 drugs that are very high potential. And I'm like, well, I'm just gonna keep one. And that way, if the market turns for clinical stage biotechs, we'll have a very high potential one that will give us the signal that it's, that the market is cleared and it's okay. Fluence Energy, we actually owned in gold tier. Yeah, I think it was in gold tier, and we sold it because I could see that the environment for new energy stocks is just, horrible, just horrible. Nobody wants to own them. Nobody wants to really buy them at lows. In other words, people are shedding these out of their portfolio, and even as they cut prices 20%, 30%, 40%, there's no buyers. There's no buyers. And that's Crinetics. We owned that for a bit, and I think we sold and we took a profit on that. But that's another one. That stock was going up for most of last year. And it does show you that there is very little interest right now in clinical stage biotech. They're being sold out now. At some point, that market will bottom out, and we'll have, and we'll go back in there. But people are still selling. We owned this one for a while, Amcor. I think we've also owned Ionis in the past. This MKTX was a huge stock through pretty much from like 2009 all the way till pretty much last year. That's interesting that people are selling that down in a big way. Here's another stock we own, Moderna. Is part of the Biotech sell-off, and Biogen as well. We own that. So, I mean, yeah, yeah, those are, you can see a theme here, which is that people continue to sell those down. I don't want to sell everything out. Biogen looks very cheap to me. And, for the most part, our portfolio is made up of stocks that have momentum and are being bid up. But then there is a benefit to owning some of these things um, as they make 52-week lows, which is that if you want to accumulate a position at lower prices, it does allow you for that. And for the most part, I don't want to buy 52-week lows, but here and there I would. And with Moderna and with Biogen, we're obviously down 20 or 30% in Biogen. Moderna, I think like the recorded loss in silver tier is 80%. Still, when I look at those companies, I mean, let's look at the market cap of these companies. Biogen is 20 billion. I mean, and I'm going to flip this to here. And so let's look at Biogen, $20 billion company that has that produces about $9.6 billion worth of revenue, right? So it's trading for 2x sales. Yeah, that's a pretty low number. Let's see, historically, you can see during big bull markets, it'll trade for, as much as, I mean, in 2000, okay, that's not a real number, but in the biotech bubble of 2000, it traded for 57 times sales. In the most recent biotech bull market, it traded for about 10 times sales, and now it trades for 2 times sales. So this is a very cheap company, and when this market turns for biotech, I believe this one will get bid up. Now, there's a reason why people are bearish on this, which is that you can see that this is the quarterly growth, and this is what people focus on, right? The short-term traders, they're very focused on that because they bet every quarter on earnings. There's a whole bunch of hedge funds that I refer to as earnings bandits. In other words, all they do is just bet on earnings every quarter. They use options and they short stock or go long stock or call or put options. You can see that, I mean, Biogen is obviously not giving them anything to write about for a long time. And they obviously went through some horrific quarters in 2020, and they really have not, grown a lot. But they do have a drug in Leqembi, I believe it's called, for Alzheimer's, which could turn things around. But yeah, I mean, year to date, down 7%, down about 40%, which is about where we are. But I mean, the last bull market here was all the way back in 2014 or so. 2015. And you can see, I mean, well, in that bull market at 10 times sales, I mean, people bought in. And right now, nobody really is that interested at 2 times sales. But I still think that that there is scope here. And I would say, let's look at Moderna on the same basis, which I know is controversial because of their COVID vaccine, and I get all that. I still look at it as a company. Moderna, 12 billion market cap, trading now at 2.3 times sales. At the peak here, it was trading for okay, that's not real. This is more, I mean, none of these are real. These real meaning like they were never sustainable, I suppose. I mean, because their revenue was going up so fast, You'd have to like come up with a normalized number, but obviously all the excitement in Moderna is gone. It's gone. Yet, if we look at their financials, they produce $5 billion worth of annual revenue. 5 billion, 5 billion. Obviously, go back a couple of years when they're selling a lot of the COVID vaccine, they're doing, almost 20 billion, but now they're down to 5 billion. But it is now a $11 billion company, and at its peak, it was a 150 billion, wow, $195 billion company. So this has just gotten destroyed. Still, let me look at also how much cash they have. Let's look at how much cash they have. They're sitting on $6.86 billion worth of cash. 6.86 billion. So more than 50% of its market capitalization is in cash. Yeah, that's crazy high. So I mean, at some point this will turn. At some point this will turn, and the key is going to be, maybe they, either the quarterly growth goes up a bit, and you can see they've obviously, since the COVID vaccine peaked, they've seen some horrific quarterly numbers, but they've got a huge pipeline. I'm just going to bring that up. They got a huge pipeline, as does Biogen, and that's where you will see. Let's bring up the pipeline. Let's bring up the. You're thinking, what is this pipeline? Pipeline is in biotech. If you're an investor, the pipeline is the drugs that are still being tested. And so you can see here, flu vaccine, they've got 1, 2, 3 different drugs, 4, 5 different drugs that they're trying out. You might wonder, like, why so many drugs? Well, I mean, there's so many strains of the flu virus. So there are different modes of attack, I suppose, on the virus. RSV is a vaccine. RSV is something that young babies get. This one's for older adults. Okay, and older adults also tend to get it. And increasingly, we have been seeing actually just pretty much everyone starting to get it. Here's a combo vaccine. You can see a lot. There's a really big pipeline, and you can see up here it says preclinical development. Preclinical means that it's not yet been put into a human being. Phase 1 trials are small trials, and generally it's for testing sort of basic safety, and maybe to some extent, like to find out the dose, limitations, and you really are not checking for, like, does it work or not, like, and then phase 2, you kind of like are trying to finalize the dose or get something, like, okay, this is the dose to give. You're starting to check for, does this thing work? Phase 3 is super expensive. It's a lot of people, and you're trying to get everything right. You have to get the dose right. You have to get efficacy right. There's a statistical way by which it's determined if something works or not. And then, so you got to go through this gauntlet to get a drug approved. I mean, it's truly like a gauntlet from like the initial point when a drug is originally like come up with to actual FDA approval is 20 plus years and $2 to $3 billion. And the vast majority of drugs don't make it through this gauntlet. They either fail at phase 1, 2, or 3, or else they don't get FDA approval, or even worse, unfortunately, they go through all this and then nobody prescribes it. And so it just goes into the marketplace and nobody wants it. So biotech is a super risky part of the market. It's why many people specialize and just focus on that. I kind of like got lucky in the early 2000s, early in my career. I, when we first decoded the human genome, there was all this excitement in 1999, and one of my bosses was like, "Somebody needs to cover this," and she's like, "Paul, you're Indian. You're supposed to be smart, good at science. I'm going to assign you. There's a conference happening up in Boston. Please pack your bags right now. Go and find out why all these then called genomic stocks were just spiking higher, and nobody could really understand why. It was sort of like the way like I don't know, like the way you see like quantum computing stocks just spiking higher, right? It was like that, but there were like a few hundred stocks just going up, and that's what got me started in biotech, and I've made a lot of money for myself, and even at Banyan Hill, I mean, we've always had a number of biotech bets because it's a difficult part of the market to suss out. It works a lot on psychology. A lot of people misunderstand the relationship between everything, and a lot of people really have no idea about the risk, which is enormous. It's just absolutely enormous. And with interest rates being higher, I'm really wary of being in too many companies that don't have marketed drugs. So like any drug that only has pipeline, in other words, not yet FDA approved, not yet being sold, they're called clinical stage because they're still like going through phase 1, phase 2. Those are super risky. And we haven't seen a bull market for those kinds of stocks now for almost 10 years. We've seen, one-offs, but not bull market. All right, now let's look at Biogen's pipeline. Look at Biogen's pipeline. I want to put something underneath my my microphone here so that let's look at Biogen's pipeline. Let's go back here. Medicines. Oh, these cookie things are just. These are all their approved drugs. Both Moderna and Biogen are valued primarily based on the drugs that they currently sell. But here is their pipeline. I mean, it's absolutely enormous. I mean, you can sort it by all these different specialties. But Biogen got their start with a drug for multiple sclerosis. I mean, they're one of the original biotech companies that have been around pretty much since the beginning. But this is their big bet right now, and this is where I believe their growth will come from Alzheimer's. At 2x sales, I mean, yeah, I mean, people are not happy owning it, but oftentimes, a stock like that's trading for 1 or 2x sales with a lot of cash, with a lot of potential, which is there from all these drugs. Not all these drugs are going to, get through the gauntlet, but some of them will. And of them, 1 or 2 will end up being big blockbuster drugs that are obviously, that sell very well, that make a big difference to patients' lives. And then the stock will shoot up, and whatever loss you have now, will seem very small relative to what you can gain. But that's the potential there. All right, let's go back to. I'm almost closing in on the regular time. Let's go back to the 52-week high list instead, and let's see what are people bidding up. Well, I mean, people are bidding up, continue to bid up. certain stocks like Costco wholesale has been on the 52-week high list. T-Mobile, this is new. I mean, I'm not going to recommend T-Mobile. It's sort of like too big. But I believe the reason why T-Mobile is being bid up is because they have this partnership with SpaceX for Starlink connected phones. And people think that, that's going to drive subscriptions over into T-Mobile, and they're probably right. But it's not something that I'm going to play. Philip Morris, yeah, I mean, that's a tobacco company that's being bought for its dividend, I think, and buybacks. AT&T, Shopify, which we own. I don't really actually know what Relax is. Let's see. What is Real? This is a company. Yeah, essentially they do books and journals. And if I were to assume why that's being bid up, it's because some amount of companies that own journals and things like that, in a world of AI, if they can find a way to restrict the AI engines from accessing their information, they can extract good payments from them. And I think that's the play here. We just added Carvana back into the silver tier, and that is making 52-week highs. VeriSign is a company that dominates the internet domain business. So .com, .net, any domain registration, the vast majority goes through VeriSign. Zillow we own. Royalty Pharma we owned, and we sold out just because my view is that the people who tend to buy something like a royalty business, it's a great business, and I disliked selling it out, but this is going to be something that sort of is very consistent and goes up slowly over time. And for ATG Digital portfolios, people are looking for performance faster, and that's the reason why we sold it. Quest Diagnostics, this is one of the major lab diagnostic companies. AutoNation, which is used cars, so Carvana going up along with AutoNation. We own Travere Therapeutics, I believe, in Diamond Tier, so that's up a lot today. TVTX up 13% today. This one, MYTE, which is My Teresa. This is part of the reselling of branded goods. There's 2 or 3 companies: Real, My Teresa, Revolve, and they've all been bidden up. And I kind of sometimes want to put one in, but I'm I think there's better places to make more money faster. And so I've just stayed out, even though we used to own them. We took losses on them. Yeah. I mean, you don't want to just go buy every stock here. I mean, what you'll see is that you want to buy the stocks of companies here where the management and the outlook for the management is telling you that the outlook is good, that they're going to see growth in the future, that when you go and check that, there's a realistic prospect that the management is not just gaming this to get you to buy the stock. And the way we sort of filter through that is we're buying newer companies with something new, some new technology, some new product or service. So if the management is guiding to that, it has to be because, people want something new. Now, with some of these older companies, you have to sometimes just kind of be I don't know if what you're saying, is completely believable. All right. I'm gonna go to the regular live stream portion of this live stream. Happy Valentine's Day, by the way, to all of you. I have worn red. Because ATG, we were founded with love. I mean, the folks at Banyan Hill, they funded us in a crowdsourcing campaign, and that was an act of love. And so, hey, Valentine's Day, this is our kind of day. This is our kind of day. Okay, almost 12:30. So then the official part of this live stream can get going. Yeah, I'll wait one more minute. And let's see here. Okay, 12:29, 12:29, and I'm looking at the comments. All the usuals are in. Welcome to all of you. Happy Valentine's Day. 12:30. Hey, it's official. It's official. Yeah, I know. I got on early, and I'm going to do that. If you ever want to just kind of like come and hang out, subscribe to the channel, and then if you click on that thing that looks like a bell, then if I come on early or I come on a day when I don't usually come on, and just kind of like work online with all of you, you get to see like, what am I doing? How am I betting stocks? You can see the apps that I'm using, and I'll just chit chat and talk about what's being bought and sold. But the official live stream topic, if you will, today is like, well, one of the things you'll see if you're looking at the stock market every day is that you can see the tastes, preferences, biases, and buying tendencies of buyers. And when you look at that, you can see like, hey, they like these sectors. They don't like these sectors. They like big companies. They like small companies. You can see all these things. And then from there, you can start to sort of like extrapolate into like, hey, where is the market going? Because almost all of our discussions on social media, people go immediately into like, yeah, the business this and the business that. And the thing is that without some human being wanting to bid the price up, there's nothing. I mean, there are many cheap stocks. There are even stocks that are growing that for whatever reason, no one seems to care about. And you can get stuck in those stocks for 6 months, 3 months, maybe a year. So you got to follow what the market wants to do, unless, of course, you're a straight up value investor and you don't care. And you're like, hey, what I would simply want to do is accumulate as much stock as I can for as small a price, and I really don't care about the time frame. My experience is that all of you care a lot about the time frame. So the mood of the buyer, what the buyers are doing, what their preferences are, what their biases are, what their tendencies are, matter. And so many people go to the business part of it first. And I would say my way, which is, constantly evolving, it doesn't stay in one place, is like increasingly I start with like, well, what is the state of the market? And that's sort of like general, which is like, and nobody publishes that, right? Nobody knows like what the state of the market is. Not the S&P 500. The state of the market is like, what are buyers buying? What are they bidding up? What sectors, what groups, what stocks? It could be by size, could be by industry, could be by some niche, could be by some trend. You got to like, okay, what's the state of the market? You like go there. And then a more difficult thing, which is what is like the state of the market maker and the dealer? Like, what is their position? Because they don't publish what they own. Like they don't say like, oh yeah, during the last crash we accumulated, and bought up pretty much, the float of like pretty much all these industries. Oh, geez, that would be nice to know. So like when, you see prices moving up, this is part of a deliberate markup. In other words, there's they as the markets go back and forth, they are interested in these stocks moving up because they have substantial amounts of it. So that's a guessing game completely. And some people say that's, a waste of time. Yeah, maybe it is. But if you want to make money sooner rather than later, rather than, like on a very long term, you kind of have to guess at that and get to have a sense of it. So this is one of the reasons why I focus on stocks that are making 52-week highs. Because my impression is that the dealers and the market makers, yeah, they're I mean, those stocks, if they're moving up on a regular basis, yeah, they're being marked up. In other words, as the buyer comes in, they're like, oh, yeah, hi, yeah, you want to buy? Oh, yeah, we are going to mark this up as you come in. And they have their way of dealing with their inventory. I don't think they sell out their inventory immediately. They use their inventory to facilitate the markup. And then somewhere, they can't sell everything at the perfect top. It's not possible. It's not possible. They're selling somewhere near the top, which is why tops are often like a range, right? They're selling there and then they're disposing off their inventory. And then from there, they don't support the price anymore. And you can kind of get a sense from that because if you see big gaps down, well, that says that nobody was there to buy in between this price and this price. Nobody was there to buy. The one more, so yeah, it drops down. So there are these hints, there are these clues that they kind of give you, but there's no way to know for sure. But it is still something that you should try to, if you're trying to make money, in a shortish time frame. And I know people say, Paul, your time frames as it is are too long, 3 to 5 years. Hey, listen, I mean, like this is a tough game. And so, I mean, if you've got to imagine if somebody accumulates a lot of stock, they're not going to sell out in 1 day or 1 second. Yeah, they're going to run a campaign to move the stock higher, to get it out here. So, it's going to take 2-3 years. Yeah. I mean, at minimum, for larger stocks, it might be a campaign that lasts 5 years. So yeah, anyway, I've gotten to all of these things, but the state of the market, the state of the market maker and dealer, and then obviously the business condition, right? The condition of the business. Pretty much everyone just focuses on the third. And maybe the first one, like the state of the market a little bit, but most people like the S&P 500, blah, 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 blah. No, I mean, like, like there's like things like market breadth, which people talk about, but I like to go internal. And be like, yeah, I mean, like if you joined earlier, you would have seen I was going through the 52-week low list, and you can see certain stocks are being sold. They're being sold down. So these kinds of things are helpful. It doesn't guarantee success, but the more work you do, the more you try, the more you work at it, the clues sort of like start to become like, a little bit more clear. And now you can apply it like, to more things and increase the likelihood of success in what you do. All right. But today I want to talk about this idea that I have, which is that the big indices like the S&P 500, the NASDAQ 100 are so dominated by the Mag 7 and generally by these very big companies that have grown so large that it is going to be impossible, really, for somebody that is owning those companies to outperform those indices by just focusing on these very large companies. You're going to have to focus on something smaller. And hedge fund managers, portfolio managers, I mean, I used to run a hedge fund. I've run many portfolios. They make their money by outperforming the market, right? So you can't just own the Mag 7 and outperform the market. You're going to have to find your edge somewhere else. And their bonuses depend on that. Their performance fees depend on that. Their careers depend on that. So they're going to move out on the opportunity risk curve and find something new. So how can you be different? Well, you can concentrate your portfolio into some significant, bets. That's one way to be different. You can change your asset allocation. If the S&P 500, I think I showed last week that 50% of the S&P 500 is in like 30 stocks. So you focus on the much smaller stocks. So you shift your allocation. You can focus on a sector or an industry, or you could be like, hey, I'm going to underweight US and go international. I mean, there's all these different ways, but 2025 is a year where people are going to spread themselves out and try to find like, hey, where can I extract some extra return so that I get my bonus? So if I'm running a hedge fund, I get performance fee, or if I'm sitting at T. Rowe Price or Fidelity or someplace where your career, is judged by your annual results, you can be like, yeah, I outperformed, and so I'm gonna do well this year. You're gonna have to find someplace else to bet on it. So today, I will tell you that at ATG Digital, we're going small. We're going small. I mean, that's always been our thing. And then, of course, like we have had this focus, which is on opportunity, growth, and innovation. So we're filtered. We are looking for innovative companies that are going through growth curves that are quite significant, much higher than the marketplace. And one of the ways that you get that kind of growth is by having something new to offer your customers, which then drives huge growth. And there is a stock that we have owned for a long time. We have been in and out of it. We own it back again in diamond tier. And I'm going to take people through that. But before I do all that, let me go through the legal stuff here. All right, which is that this live stream and the content from ATG Digital is not investment or financial advice. It is presented to all of you as opinion. Use it as information, engagement, and you're welcome to laugh and be entertained by it as well. Next, all ATG Digital content may contain errors, oversights, or mistakes. Understand that investment operations, which is what? Buying or selling a stock, crypto, option trades, pretty much anything, have significant risks and can lead to the loss of your principal. What is principal? Money. In other words, you go in something, you're not guaranteed to make money. Yeah, I mean, I could be wrong. I could get the timing off. I could get the stock off. Anything is possible. You could lose money. So, I've been telling people in updates, start slow, start small if you're new. And as you walk up the curve of your own knowledge, as well as how to use someone like me, someone like ATG Digital, then you can sort of like increase your cadence, increase position sizes, and things like that. Next, the owners, employees, contractors of ATG Digital, we own, trade, transact in the securities that are mentioned in this video and all content from ATG Digital. We do not take money from companies or crypto promoters, sponsors, company managements to recommend their stocks or crypto tokens. With the emergence of the influencer trend, phenomenon, economy, people like me are often can be paid to recommend stocks or to recommend crypto. And by law, and certainly by ethics, you should tell people if you are doing that, but it is not always done. We can tell you straight up, we don't take any money. I'm offered money from time to time, especially from crypto promoters, to be like, hey, we'll pay you X. I'm like, yeah, no, thanks. I think I'd rather keep my independence. So whatever you are getting from us, for better and for worse, for gain or for loss, is our own independent, unique point of view. Next, here are some of the things we put out for free. The Substack goes out pretty much every day the market is open. Ballman Speculating is my podcast on Spotify, which Yeah, it's pretty reasonably active. I haven't done one in a few weeks, but I tend to be sporadic. I'll put up 2 or 3 in a row. And generally, I talk about sort of like investor behavior, psychology, and macro rather than stock specific stuff on Ballman Speculating. So if you like that kind of thing, check into Spotify. Obviously, I'm on YouTube right now, which I'm on every week at minimum once. And sometimes when there are major events like the halving, 100K for Bitcoin, and other things, I'll just come on. So subscribe to the channel and click on that bell. And that way, when I go on live, you know when I'm on. Next, social media. I'm on X pretty much all the time. I mean, pretty much all the time. Instagram, I post on it from time to time. And Facebook, we are also reasonably active there. If you are looking for stock ideas, crypto ideas, general guidance on the market of the kind of nature you can get a sense for from watching this live stream, atgdigital.media is where you would go. We have 3 stock picking tiers. There's the silver tier, which is a multi-cap tier. Those of you who were with me at my previous publisher, Banyan Hill, would consider that more or less a peer to Profits Unlimited, which was then the flagship publication. Then that's what it became. Then we have gold tier, which is sort of like mid-cap stocks, small to mid. And then there's diamond tier, which is small to very small. And then we have like options and crypto trading, which is in platinum tier. And then we have purple tier, which is sort of like a loyalty tier where, like you made a lot of money. You're like, hey, thank you. And then we provide like sort of like a focus reports where we tell you like, hey, this group of companies or this particular security, like, like we like it. Here's something that's going on, what points to it. So that's purple tier. Okay, I'm going to leave this plug on and let's get on to quickly talking about what I expect 2025 to be, which is I believe it is going to be a stock pickers market. And the reason for it is what I laid out last week, which is that there's extraordinary concentration in the S&P 500. There's extraordinary concentration in the NASDAQ 100 among essentially 20, 30 stocks. They are the Mag 7 stocks, and then they are just generally very big companies. If you are a portfolio manager running a hedge fund, running a mutual fund, running an account where you are paid based on your performance, you are going to have to find a way to overcome this huge concentration. And you can go like, hey, I can underweight the United States. You could be like, I'm going to sit in cash because I think the market's going to crash. I can go small cap. I think biotech is super cheap. I'm going to overweight that. Whatever it is, you can't just simply sit there and just buy those like top 20 companies because they've been bid up a lot. And you can't get any competitive advantage versus all of your competitors. So you're going to have to go somewhere. And I believe after 2 or 3 years of like huge outperformance from very large companies, some of these smaller companies with enormous, gigantic, humongous potential are very cheap, very cheap, very, very cheap. And going through my like 3-part, I said like, hey, if you're going to gauge the market, like you want to know the state of the market. Well, the state of the market is that people over-own the big stocks and they under-own the small stocks. So that's the state of the market analysis, right? Tick. Then we go to dealers, right? Dealers and market makers, their position. Well, if people have been buying big cap stocks for like 2 or 3 years, who has been selling it to them? Well, yeah, the dealers and the market makers have been selling. So they would be like, yeah, we don't really own that. And then if everybody was selling small and mid-sized stocks, well, who was buying? Because remember, as prices go down, we're not buying. Retail folks, they're like, dump it. This is like this is a dumpster fire. Get rid of it. Well, there's only every time there's a seller, there's a buyer. So who was buying all those stocks on the way down? Well, yeah, the dealer and the market maker was doing that. So they have that inventory, right? And so, yeah, that's a tick on like the second thing. And then as a business, now you got to go stock by stock, right? Many of these companies like have spent these last 3 years cutting costs, cutting projects because many of these companies are quite young. They have new technology, new innovations, new products and services, but they were pretty much kind of spread like all over the place, as a result of like the previous market where people just like, hey, we just want innovation, like you can go after any project you want. Interest rates are so low, we'll give you money, it's fine. And that gravy train is over. And they have spent 3 years restructuring themselves. They have like cut themselves down, be like, yeah, that project ain't going to make it, cut, go. Yeah, our teams are too large. We had all these people. Yeah, we can't afford all that, cut that. And now they're pretty focused. So everything to me points to small cap outperformance. And I think like within that, the best performing stocks are going to be companies that are going through some wave of growth. Now, the company that I'm going to talk to you about is a $1 stock. And I know people love these $1 stock because I know what you're going to do. And I'm going to tell you right straight up front. If you go take all your money and you put all of your money on this and you lose it, do not come to troll me, please. Do not come to give me hell. It is your own fault. It is only your own problem. And if you lose all your money, it is completely on you. Equally, I'll say if you make money, hey, that's also on you. But listen, these small little stocks, are incredibly risky. That's in the nature of any smaller company. They're just generally riskier. Why? Well, they got less money. They only have one product or service. It's very easy, when you're trying to, like when a new product or service being rolled out, they can have a 1 quarter hiccup and the stock will drop 50% and then recover 3 months later. In other words, financially, they're more risky. The stock by itself is more risky. There's less liquidity at any given moment. There's just a lot of risk. These are not the things to take all in bets on. I know despite me saying that, there will be a whole load of people that do it. And despite me asking you not to come back and troll me, a whole load of people will. You said this and this happened. Listen, folks, I'm not God and I'm not capable of getting every single thing right. Yeah. You just enter into any trade knowing that the S&P 500 is 500 stocks and 7 stocks have carried it for the last 3-4 years. In other words, 90% of the stocks in the S&P 500 have done nothing, if not lose money, right? So yeah, the odds are still like, like, hey, I may get something wrong. So act and behave in a way that like, that makes you like, that accepts that, right? Okay. With all of the, the caveats and everything done, let me do the grand reveal, which is, this is the stock. This is the stock that I am putting out there as being something that has enormous potential. Enormous potential. Senseonics. So we have owned this for, I think I put this into, was it? I can't remember which service anymore. It's all starting to fade. We had so many services at my previous publisher, Banyan Hill. But I put it into one of these services and it went higher in the sort of like the bubble-ish 2021 period. And you can see that. Let me get this up. Let me get a longer term chart of this. Put up a 10-year chart. Okay. This is a 10-year chart of this. I think we can get rid of some of these things. The average, and we don't need the volume because Just makes it a little bit easier to show. All right. Let me just check and see if, yeah, that looks good. Okay. So that is clearly a pretty horrifying chart, right? I mean, it's a chart that suggests a company, a stock that has pretty much gone nowhere. I mean, this thing came public in 2016, got up to $5 in 2018, back to 35 cents. Well, back. Hits new lows of 25 cents in the COVID crash, moons back to 556 in the COVID bubble, and goes back to 25 cents as, yeah, we have the growth innovation market, utter complete bear market smash. So why now? Why now? Why now? Why is this setting up, in my opinion, in my judgment, to actually be a real run? In other words, a run that is not just going to be something where you get the stock to rip and then, essentially either, the rug gets pulled out from underneath you in the stock. Why now? Well, we went through the first two elements, right, of what I think are right, which is that small cap, I think this is where the market conditions favor it. Second, we went through the dealer who was buying this at 25 cents. I mean, okay, we put it back into the portfolio, but I would say I'm an exception. Most people were not buying it. If they were, it wouldn't see that kind of decline, right? Right. The reason why prices see lows is because there is relentless selling, right? So let's just say the vast majority of the float of Senseonics sits with either true believers, strong hands, in other words, or else dealers. Or, there could be a few institutional buyers here or there that believe in the stock. Well, now let's go to the last part of the analysis, which is let's go and look at the condition of Senseonics as a business. All right. So what do? Okay. So they are the creators of the first and only long-term implantable CGM. I'm just going to click on this. Okay, we don't need that. This is an actual medical. CGM is what? Continuous glucose monitoring device. Who uses CGM? CGMs are used by people with diabetes. I'm not going to put out there the numbers of diabetes. You can go to ChatGPT, you can go to any AI agent, and they will give you all the numbers. But diabetes has essentially been an epidemic globally for, I'll say, about a decade. And a wireless implantable CGM, like what Senseonics provides, it doesn't say that, but it is wireless. This is a huge increase in the, I guess the what's the right word? The ability for people with diabetes to have a level of information, convenience, mobility, and also control of their data and of their their state of hey, what's going on in my body? So some of the things that have happened with Senseonics, I'm trying to bring up let's see if I can get sometimes these companies, if you go to the investor relations, they have a presentation that would go through, but I don't see one here. So I'll just quickly go through these things that are a big deal, which is that Senseonics just got its CE mark. What is this? CE mark is a registration for the European Union that allows them to sell their continuous glucose monitoring device in the EU. The EU is not the biggest market, but it's a perfectly good market. One of the things that really differentiates the Senseonics device, which is called Eversense, is that their continuous glucose monitoring lasts for 1 year. For 1 year. So, like, you get this device, and it's essentially what? A sensor. Um, and it's got as this says here, a smart transmitter in there, and it just continuously transmits your medical condition as it relates to diabetes nonstop. And what it does as a result of this, it starts to make real a number of things that previously you couldn't do unless you had real time or near real time data, which is like you can start to integrate it with insulin pumps, insulin delivery systems. So it really starts to make a lot of these things become much real, and that makes it a bigger market for continuous glucose monitoring, whereas before it is just purely information that you're getting, and obviously that information is really good, but now you can actually create an algorithm based on real-time data, and that now you can kind of automate. Maybe you'd supervise the automation, but you kind of automate. But the reason I'm bringing all this up is that it is got this advantage from being something that's 1 year, which is the longest that's out there. B, it's wireless. C, real-time data. So you see a series of benefits for the user that are actual, that are real. But the reason for why now is really what the company said in its November 7th report, which is that they're like, hey, so they've gotten approval in Europe. They've gotten approval in US. It's for type 1 and type 2 diabetes. They got approval in the third quarter of last year. And what they are seeing already, sorry, this is not the press release I want. This was the third quarter. This is the press release. Sorry. In an update on December 9th, right, they were like, hey, investors, so we have launched Eversense into the market in the United States. They're going direct to consumer, and then they have some partnerships of people that also sell. And then since launch, Eversense 365, which is the named device, has shown a 42% increase in the number of providers prescribing Eversense and a 69% increase in prescriptions from top subscribers compared to pre-launch rate in 2024. So in other words, they are seeing an immediate and significant response from the marketplace. In other words, doctors that treat people with diabetes are looking at it and being like, hey, this is good. We are going to recommend this to our patients. And we're going to recommend this in big numbers. 42% increase is big. 69% increase is big. 1/3 of Eversense prescribers are new first-time Eversense prescribers. Number of patients switching to Eversense monthly from competitive, meaning other continuous glucose monitoring, has increased 47%. Remain on target to achieve annual growth of approximately 50% in patient installed base at the end of 2024. And they are reiterating their 24 guidance of about 22 million. But what we really, at this point of the market, is 2024 is in the rear view mirror. 2025 is what we care about, right? So let's see if we can get a sense for where the estimates are. So this is a shortcut that I use to vet stocks, right? So this is the green line is the revenue estimate for next fiscal year, but that's for 2026, I believe. The blue line is for 2025, and you will see that is telling you the increase in estimates for Senseonics for 2025. And you can see that's like a straight line up. As a straight line up. You might be wondering why there was a straight line up last year. It's because they thought they were going to get approval last year, but it got delayed by a year. So then we just go through and let's like double check these numbers, which is like we can go and see what are our revenue estimates for the current fiscal year, which is for 2025. Where did we begin? So the original estimate, which was, when people thought this was going to be approved some time ago, was from there, and then it's gone down. But now we are back to 34 million, which is, a spike up. And that is reflecting, what that said. You'll see like that was on January 10th. And that was like about a month after this update was done, right? So we're getting some solid clues here that the company is saying that this launch is going really well. They're giving to us real numbers that tell us this launch is going really well. We see estimates moving up. They're talking about like 40, 50, 60% numbers higher. And my experience is that very early into a launch, people tend to be conservative and underestimate the growth. And so that allows the company to announce generally higher growth than whatever the analysts are estimating. And so it drives a cycle of constant surprises. So every quarter, the company's like, yeah, we think we're going to do well. And they're like, but we did even better. Stock goes up. And then next quarter, hey, we thought we were going to do well, but we did even better. And then that can last for 2 or 3 years and can lead to huge gains. Huge gains. The best example of this is really like, Dexcom, which is a competitor, which went from, let me put up Dexcom's chart, which is a continuous glucose monitoring. Here's what this company did as they went through, again, like a new product cycle similar to Senseonics. I mean, they were up at some point 4,000 something percent. So we are like here somewhere. In terms of, we are like in the very early stages, like somewhere here, and we're going to go through, if I'm right, the benefits of Senseonics are so significant that they are going to get a very large share of the continuous glucose monitor. They're going to take share from Dexcom and from any of the others. Why? Because 1 year wireless, once companies start to integrate with Eversense 365, they've got this advantage where they're integrated with it. They own the data. They obviously, the providers get comfortable with prescribing it. The users, start to renew. So in other words, they build like this advantage that is kind of like hard for someone else, even if they come out with a similar product, to overcome. So now once you get that lead, it's hard to displace it, especially when it's something that comes with a level of convenience that is hard to overcome. Like, 1 year is probably plenty in terms of like, swapping out. In other words, someone that has diabetes visits their providers probably a few times per year. So you can switch that out, no big deal. So offering 3 years or 5 years is not that much advantage. So you can't really beat them there. The wireless thing is patented. They've been working on this for a long time. Even if you want to do it, it's patented. You'd have to I believe there are other wireless providers, but theirs is been proven out to be the best. So hard to overcome over there. And then, like I said, once you're the leader in this and people start to integrate all the other devices and therapies with it, yeah, you got a recipe for a huge, huge, huge winner here. And at this point, Senseonics is a $639 million company. $639 million company that is probably on the verge of going through transformational growth. Obviously, if I'm right, there's no way. I mean, they're starting from obviously like a position where no one really is thinking this, but everything points in that direction. The company is telling you that the market is responding. I will say that's the most important thing. Immediately when you're launching something that if you get no response from the market, and who is the market for Senseonics device? Well, it's providers and it's obviously patients. If the providers don't think there's a significant enough benefit, or that it's inconvenient, or it really is something that's as more of a bother. In other words, I got to deal with I got to embed this device, and there's not really a benefit. In other words, they got to push this onto their patients versus be like, hey, this thing's great, and you'll get some benefit. 40 and 60 and 50% numbers tell you that the providers love it and that their patients are experiencing it and they're not bringing it back and be like, I don't like it, it's uncomfortable, it's not doing anything. Everything is pointing to a big hit. And truthfully, this is the reason why I got in very early, but back at that time, I hadn't quite really worked out okay, it wasn't approved yet. And obviously they had to go through a few cycles through the FDA to figure out how to get it approved, get everything ready. But this thing's ready. This thing is finally ready. And you can see the market reaction, right? Let's go to this chart here. Okay, and you see here, this is December 10th, right? Let's get December 9th. December 9th. December 9th, you see people, the market's like, what? Really? 49, 69, 50% growth? I want in, right? And it's just continued to go. In other words, as people have gone and looked at the story, they're like, this is for real. I want in. I'm willing to bid up. I'm willing to bid up. I'm willing to bid up. So the market is confirming, I believe, we don't know because they're not telling us, that hey, they think this is for real. They think this is going to be big. And they have bid this up from a quarter to about 69 cents. And obviously, the long suffering shareholders from the last, 10 years, they're like, oh my God, thank God. But they're not paying attention. They're all focused on their internal psychology. Oh my God, this thing's been a loser for so long. It's terrible. I don't believe it. This is one of the problems with investing. We're so focused internally on our own, psychology, that when the good news for something that's been long suffering, a terrible performer comes, we don't believe it. Instead, we're like, I just want out. I want out. And you can see, over 5 days, those sellers cleared out. And then we get boom. January 10th, you'll notice that the estimate that I showed you was on January 10th. In other words, some brokerage company or some analyst somewhere went being like, we're going to lift our numbers for 2025. We're going to lift it up. And they probably told their clients, or people noticed, and boom, move higher. So, and now we're getting somewhere near, we're going to get, they obviously pre-announced the quarter by telling you that, it's going very well, but we're going to get, in a few weeks. Let's see, when does Senseonics report? Let's go to this. So this is based on, last year's. They're scheduled to report around February 28th. And the market is like, we want in, because they are bidding up, right? This thing's been a complete rock star of a stock pretty much since December 9th when they provided their preview. It has just been up, up, and up. And I believe that, this is going to continue, not in a straight line. There will obviously be volatility. And one reason for volatility is that they're going to need some money for growth. If you look at their financials, I bet you'll see like, they've got a decent amount of cash, but for them to like really go, they're going to need to issue some shares and take in some money and get their cash balance to probably a few $100 million. And that way they can really push Eversense into the marketplace and not be like hamstrung. So, during period, like people like, oh my God, they're diluting us. Oh, this is there, must be terrible. I'm be like, yeah, there's no way to grow unless you have enough resources and capital. So that's one reason why, you'll see some volatility. Also, I also mentioned earlier, like small companies, I mean, they can go through a quarter, remember, this is a very small company launching a very large product into a marketplace that is dominated by big companies. They can stumble in a quarter. And I can tell you, people will panic and it will be down 20% a day. Be like, it's all over. It's not, but yeah, that can all happen. And so if you buy into this, you got to be prepared for all that, right? It is going to, but everything is pointing to this being a big deal. And so we got so many things going on here. We've got a marketplace at like the top level that is seeking out big opportunities in small companies. So tick. It comes after a brutal bear market in the stock and in the category of company, small cap companies. So in other words, who owns this? Well, yeah, it's true believers, dealers, etc. So there's not that much stock in the marketplace that is free floating. So anybody who's like listening to this and, or has gotten this pitch from, I don't know, some broker, be like, this is great. They're like, I want to buy 20 million of it. Well, good luck. Yeah, you can't get in that easy. They're like, you want 20 million? You're going to have to bid this up 20 or 30%. So, the first 20 million drives it 50%. The next 30 or 40 million drives it another 30%. So this has the potential, to go up and to go up a lot and continue for a long time. All right. That is the primary thing that I want to talk about in today's live stream. I'll quickly go over, which I'm in the habit of doing, the Substack that I wrote yesterday. And I really recommend that all of you subscribe to the Substack. It is for free. We talk about, that is the Substack. I think you can just search for it with Google if you don't want to like go do it. Otherwise, it is paulmampilli.substack.com. But I talked about AI stocks, and I'll skip the part like at the beginning and just say that people continue to be very focused on chips for AI. And in my opinion and in my judgment, you will, looking back in 3 or 4 or 5 years, wish that you actually bought stocks like this, which right now are not being hyped as AI plays, but in hindsight, they will be. Nano Dimension, which I wrote about 2 weeks ago in the Substack, UiPath, which I covered last week, Teladoc was covered by Dan, and then Zoom, which I've talked about. These are all AI plays that nobody is really talking about because people are focused on NVIDIA, AMD, obviously Palantir. But I started in the Substack with this idea that like, hey, you got to look forward. And right now, people who own chip stocks, like I wrote this thing out on X. People learning slowly that semis and chips are cyclical stocks, tough to buy and own on the way up, but they look great near the top and like a layup because all their financials look great. And that cyclicals are the hardest trade ever. And semis are absolutely cyclical stocks. They're not growth stocks. There's a very pronounced cycle, and you want to own them at the bottom of the cycle. You buy them, and they're kind of almost look like a step from bankruptcy, and you sell them when they look cheap and in rude health. It's such a mind bender. So I got this response that tells me essentially what the last 10 years have done. Semi is the best performing sector in the market. SMH, which is the ETF, is up 29%. So the thing that this person and many of you will be like, hey, in 2014, assuming that you would need to get 29% a year, you would need to buy it in 2014. In 2014, nobody wanted to buy semiconductor stocks. Why? Because from 2004 to 2014, semiconductors looked crap, junk. They had gone up 38% over 10 years, less than 4% a year. The S&P 500 had done like 3x better. Nobody wanted to own that. I know this because one of the first stocks that I recommended was ST Microelectronics in 2016. And ST Microelectronics looked like crap. They had 5 years of revenue declines, right? I'm not telling you because I want you to buy ST Microelectronics or my point is that backward looking, people who are focused on semiconductors are backward looking. The stocks that are going to do well in the future, they may not look great right now. Their financials may not look great. Their charts don't look great, but you have to have some idea of where the future is going, and you're making a bet on it. That's what, how we made 750% on STM and nearly 700 on AMD. I wouldn't buy any of those stocks now. And, we have no chip companies and on any ATG digital portfolio. All right. That's the last thing I'm going to talk about. And now let me take some questions and or comments that that are there. Also, I have turned on the join in YouTube, which allows you, if you are not a subscriber and you just want to, reciprocate for the information, picks, anything that you want, you can choose to join. And I see that we actually have one member. Thank you, Keith Kern, for joining. I appreciate you. You are welcome to join. I obviously encourage you to subscribe. I think an ATG digital subscription provides a lot, guidance, picks, and also you become part, I think, of a investor community that I think is just really cool. The folks that funded ATG Digital, they gave us money to start. They gave us money, right? I don't think any other information company was essentially started at the generosity and love of their community. Okay, let's go to some comments. Don says hi. Hey, Don. Thank you for joining the live stream. William Green says, Fannie Mae. I assume you're asking about Fannie Mae. There's nothing new. There's nothing new. The price continues to swing. I'll just check again. It's near 7. We are awaiting more finality on what the ultimate plans are going to be. But it has been very clear that President Trump has said for a long time he plans to free these companies, and we have not heard anything different. Joanne says hello, and hey, hello, Joanne. Thank you for joining the live stream today. Nino says hi, and hi back to you, Nino. Vikram wants to know about mankind short squeeze. Well, we are not seeing anything yet. I have laid that out as a potential for the company, but we have not seen it yet. 10.5 million shares became a naked short as a result of them paying back their convertible bond, but we have seen no sign of a short squeeze yet. I think if you see it, you will know. The stock will be up and be up on a pretty regular basis. Vikram guessed what the stock was going to be that I was doing the live stream on. Certainly, I think 2, and then 5, and then 10, and then much more. I mean, it's a 600. It's about like under 700 million. So I mean, it's definitely got a lot of upside. MSTR, any update? MicroStrategy. No, MicroStrategy responds to upside volatility in Bitcoin. We have not seen upside volatility. What is upside volatility? Big sudden jumps up, right? Big sudden jumps up. Not like, oh, it goes up, goes back down, and then makes a marginal new high. Like we had that big jump up to about 100, and we had the 100,000 sort of spike, and like a little bit after, and so in November, that was when we got that big spike. So that was a big jump in Bitcoin volatility. That's what MicroStrategy responds to. We've not seen it yet, but I expect it to start soon. We are arriving at the 10th month. Yeah, 10th month since halving. Every past halving cycle, you start to see big jumps around the 10th and 11th month. So it should be impending any day now, I believe. Another hello, this time from Colorado. Hello there. Rashad, regular live stream watcher, says, hey, Paul, good to say, and thank you for the X post. You're welcome, sir. And I appreciate you joining us on this live stream. Raul, another regular live stream watcher, says, what are my thoughts on Tesla with all the negative from China? I'm not sure what the negative from China is. I mean, Tesla has significant market share in China. They have a lot of competition in China. I really recommend, there is a channel called Out of Spec Reviews. I think his name is Kyle. He went to China and went and checked out all the EVs in China. And they face tremendous competition, but it's sort of like Apple. They've got a brand, they've got a presence, and they are trusted in the thing that matters to a lot of people, which is safety. They are considered the #1 brand for safety, and so they continue to keep a decent level of market share, even though the competition and the choice and selection in China is mind-blowing. I mean, mind-blowing. I really recommend go check out. Maybe I can. Let's see. Let me get Out of Spec Reviews up, and I can scroll through some of let's see, China. Okay, this is a quick one.
This is the hot Luxo van here.
Yep.
This is basically like starting to replace GLS Maybach, but it's got also in the back a projector built into your car. It just doesn't look right, but I guess as a Cybertruck owner, I can't
looking
really say
at
anything.
cars in China. I mean, there's so many.
Lots of competition.
But I don't know if the news is negative. I mean,
this thing is
Tesla
absolutely crazy. That's such a wild machine.
Doesn't have FSD in China yet. They're still working on getting the Chinese government to license it over there. But I mean, the choice there is incredible, but it's kind of amazing that they have any market share there, truthfully, because the Chinese competitors are incredible. Let's see if I can show you some of the more amazing cars. I mean, yeah, look at these cars. I mean, they got like screens in the back. I won't get to the part, but like those chairs turn around. Anyway, I could go on and on. I needless to say, like I would like to go to China and go check out the competition. But remember, I mean, they're gonna have to pay tariffs to bring them in here. Maybe they'll do that. Who knows? Long way of saying I'm not at this point concerned about China. I think they're sort of like Apple, like, you know, iPhones still sell in China, even though they have tremendous competition from all kinds of Chinese makers. They're still a big brand there. Prospect for Tesla stock, I believe that we'll get past 1,000 this year. Tesla has always moved in spurts. I'll quickly put that up. And you can see if I put on a longer chart of Tesla. I'll just clear this. You can see that Tesla stock tends to move in spurts. And we had the last sort of like spurt from kind of like we put Tesla into the portfolio in 2018, got down to like 11, and then just 414, then back to 100, and now it's sort of like back to the old high. So it's kind of like the equivalent of being at 25, or something like that here. And I believe that 2025 is going to be a breakout year as we get developments on Cybercab, FSD. Those will be the two big things that really drive the stock in 2025. This is my mom. Mom is attending a live stream, even though it's super late in India. Thanks, Mom. It's good to see you. Plug Power. Let's look at Plug Power. Let me go back to the chart screen. Yeah, this is a stock like I was mentioning in the sort of like the early part of the live stream when I got on early, that new energy stocks look like death. And Plug Power is part of that group. And so we just need the sellers to sell out. The news at the company level is not terrible. They just raised a bunch of money, but the market analysis, no one really is buying new energy stocks. They're still selling them. There's a stock today, Fluence Energy, which we owned and sold. It's down 48%. I mean, they reduced their forecast for this year, and people just like cut it in half. So not a great environment for new energy, but we're going to ride it through. I believe that Plug Power has a particular niche in hydrogen, which is valuable and useful, especially in the transportation sector. So we're going to sit it through. Well, we'll know. I mean, I believe like maybe there's, another low here as the last of the sellers clear out. But I think I think by June, the selling's done, and then it bottoms out, and then maybe late 2025, early 2026. Vikram says, thank you for live chat. Hope you're feeling better now. Definitely a lot less throat clearing and a lot less cough this week. Any thoughts on NIO, Chinese EV? Yeah, I mean, watching Kyle on Out of Spec, I'm just impressed in general. I mean, the charging speeds in China are about 3 times that of the United States. The battery ranges are 20 to 30% bigger. The features that are available in their cars are, I mean, they're comfort features, but are kind of wild. I mean, there's also like some of their cars can crab walk into like a parking spot. So, I mean, we own Xiaopeng or Xpeng in the silver tier, and it's starting to go up. They just released their numbers. Here's Xiaopeng stock. You can see it's just had this mini breakout after they announced good numbers. Looks more impressive on a one-year basis. But yeah, it's just gone through a breakout. It's got a, it's obviously not done great. So there's going to be sellers that keep pushing it back down. But I think even in the United States, there are stock buyers who are going to be like the EV industry in China. Yeah, this is a growth sector. Obviously, they cannot sell in the United States, but they don't need to necessarily. I mean, these are still youngish companies. China's a fairly big market. They can sell in most other global markets. In South America, you can see Chinese EVs. You can see them in other parts of Asia. So even without the United States, they can grow for some period of time. And it's possible that their costs may be low enough that even with a 20 or 25% tariff, they may be able to sell here and still sort of like make marginal amounts of money that still makes it worthwhile for them to be here. So NIO, I don't hate it. We don't own it. But I would say the entire Chinese EV industry is definitely interesting. Anthony Perry, another regular live stream investor, live stream watcher. Have I heard of the autopilot investing app? Could be a potential alternative to your ETF aspirations. Check it out if you haven't heard of it. We will. I mean, as you know, some of you might know, we have been asking for soft commitments from people because we'd like to essentially take the picks from our 3 stock picking tiers and make an ETF out of it. And that way sort of like take away the work from people of having to buy every stock or do any of this. And that's what Anthony's talking about. We will check this out and we appreciate you mentioning it. Illumina. Let us check this out. Illumina. This is what Illumina looks like. Yeah, I mean, biotech, life sciences, very tough trade. Very high potential because they own they are the leader in sequencing. And I believe that the future of healthcare goes through genetics, which means you got to go through sequencing. But this is a company, if I put up a longer term chart, like here's 5 years. Yeah, I mean, it's just seen endless selling. But there's really nobody else that has their scale. Nobody else that has their scale. And if I am right, and we're going to see a lot of diagnostic tests based on our genetics, testing for your genetic profile is going to become something everyday, commonplace, then Illumina is the stock that's there. And there's also the spinoff, which we own in Silvertier called Grail. That stock, for reasons that are not completely clear to me, has been on a complete tear. Let's see here. Grail. Oops. Grail has been has gone from 16 to 33 as Illumina has done this. So not completely clear what's going on with Grail, being that generally speaking, you tend to have stocks that are similar. So Grail they were forced to divest from Grail by the Biden administration that wouldn't allow them to buy them. And maybe people are betting that with President Trump, that deal that they can go back and redo it. I'm not clear, but it's a mixed market. Grail is like ripping higher, Illumina is going down. So I like both companies. They're both in Silvertier, but I expect up and down movement until sort of like the marketplace shakes out. Austin asking about Teladoc. Let me just get that up because that is definitely been a stock that has been ripping higher recently. I mean, my general, Austin asked, TDOC is up 40% last month. Would you recommend to wait for a pullback or just start DCA into a position now? If you're a DCA style investor, and remember, this is not investment or financial advice, you would be buying pretty much a small amount pretty much every day. I put up this post on X, which is like, people talk about buying low. Truth is, buying low is like a fearsome, lonely, and terrifying proposition. I know from experience. I was buying in 2008 across various accounts, as Lehman Brothers was going bankrupt, and every person questioned me, criticized me, mocked me, made me doubt what I was doing. I can tell you, at the moment of action, even I was like, what if it goes lower? What if it goes, people stop buying? But yet that's the way to capture lower prices. So the answer to this, really, in my judgment, in my opinion, is that if you believe that, Teladoc is going much higher, which I believe, and $14, $13, $12 will all be seen as the lower prices, quite low prices in the future, then you wouldn't worry about, a 3-day rip. You would just continue to keep buying small amounts every day into even what are shorter term rips, because in the long term, and, let's put up a bigger chart, in the long term, if it goes back to whatever, 45, 80, 150, 300, whatever, they will all seem like very low prices. That's what I would say to your question. I'm not trying to avoid it. David, another regular live stream watcher, is horrified that I started 30 minutes early. I just think, well, as I've said, there's no way, YouTubers that cook or do they refurbish furniture or redo computers. They can show you what they do. How does an investing financial YouTuber show what they do, how they do it? So by coming on a little bit early, showing a little bit of like, hey, kind of like what I do when the camera's not on me. I just figure I'll come on half an hour early or so, or periodically come on when maybe there's big volatility in the market, and just be like, hey, this is what I think is going on. So subscribe and click on that bell, and that way you know when I'm on. Miss Puppy Pup, a regular live stream watcher, saying hello. Nice to see you. Anthony Perry says, like button smash. Yeah, give us a like. Helps us with the YouTube algorithm. It helps, I think, like if you have like a bunch of likes, I think it's a mixture of like the immediate response, likes, and to some extent the subscriber count. So help us out in any way that you can. David saying, yeah, on Tuesdays, but I'm going to come on from time to time and just kind of like work online. Just kind of like the people that cook, they get to show you this is the ingredients and yours is cooking and all these things. So it's kind of like that. Just come on and go through a little bit of my process, which I've shown you here whenever people have asked me. Yeah. B is on manning the chat. So yeah, come and I don't always know exactly when I'm going to come on, but yeah, I mean a little bit before. If I'm feeling good, I might come on an hour. So if you've got questions, you want to come and debate, I don't know, in video with me, tell me how I'm wrong about everything. Yeah, come and troll me if you want. But yeah, come on, and or you just what you're working yourself and you just want some company. Come on. And thanks, B, for taking care of the chat. Harlan says, I've owned Senseonics for years, waiting for it to reach its potential in the US. Well, Senseonics has been a lesson as well, that is that while a company is developing its technology, its stock is really it's really publicly traded venture capital. They are going to be issuing shares to raise money. There is also like a lot of stock buyers will simply not consider it as a buy. Why? Because they have no business. They're still just, developing the technology. So, but now with them commercializing, everyone, is a potential stock buyer. Why? Well, now they have revenues. They go provide forward guidance. And that's the kinds of things that stock investors look for. So the audience for their stock has widened a great deal versus before. So from here, I think we can have a huge, 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 did I say huge enough? Huge one. I've covered biotech, but I haven't heard BHVN. I have never actually recommended BHVN, and it is something that essentially I've considered that I sort of missed. And one of the things that I feel like if I didn't catch the train at the right time, and here's the chart for BHVN is just, it's a huge run. I sometimes, if you don't catch the train about the right time and the train starts to reverse, you can't tell if that's a temporary reversal or if that's a train that's headed back in the other side. So it's something that I've looked at many times, but have not felt confident enough to pull the trigger because I didn't catch it at the right time. But obviously the stock has done very, very well over the last, several years. Antonio's House of Pizza says hi. Would love to know if you actually have a house of pizza. I'm very curious. David says, bought into Senseonics in July 23 and 94 cents. Happy about it. Yeah, but you have definitely been through quite a bit. But I think it's going to really, really be rewarding for this time. Hansel says, hey, Paul, what put would I sell? I don't know. I mean, in general, I don't really buy puts. In general, I don't really buy puts. I've generally lost money buying puts. I tend to be a positive thinker. I tend to think in terms of upward prices. And it's very rare that I have done that. And one of the few times I've done that, we have lost money. I've lost money. And in our services, we generally only buy calls. We do not buy puts. Now, that doesn't mean that we'll never buy puts, but generally we focus on calls. And that's true in my personal trading, and that's true in the ATG Digital Platinum Tier portfolio, Platinum Tier as well. I was hoping that in the past Dexcom would buy Senseonics. Well, I was never hoping that, because I always look at these companies and think well, you can make 50% or I can make 5,000%. And if a company buys another small company, you get this one-time gain of 50, 60%. But man, if the company really hits, you get, hundreds of percent, maybe thousands of percent. But I mean, I understand everybody wants their money sooner rather than later. If you want to, check out stocks like Senseonics, actually, Senseonics is in our diamond tier, not platinum tier. Platinum tier is our trading portfolio. Senseonics is in the diamond tier, which is a stock portfolio. That's just a mistake there. Peter says, I had Senseonics during COVID. Yeah, you likely bought into that big run, which was exciting and fun. But it was, in hindsight, that was like a kind of like a pump mania bubble, if you will, where everybody was going into the stock market all at the same time and just pushing the stock prices for everything up. Yeah. Here's the corrected one, which is Senseonics and stocks like it, small stocks with huge, massive, enormous, humongous upside, diamond tier. We got like a stock there that's just 39 million market cap, 39 million. I mean, that's like a small company. But they've got a product that really can go. I want to give a shout out to Keith Kern, who just became a YouTube member. And you can do that too. And I will give you a shout out as well. Thank you, Keith. We appreciate you. Thank you for becoming a member. As a former wholesaler in the industry, an ATG member, Senseonics and others holdings are solid. This is from Fred. You tell it the way an advisor would want to hear the story. Keep up the great work. I thank you for your compliment, sir. We are hopeful that we can ultimately, be of use to you. Elon always says, the point of a business is ultimately to be useful to people. And we're not going to get everything right, but we can try to be as useful as we can and be as open as we can about it as well. Lisa, hi, Paul. Thank you for all that you do. Have been following you since 2019. Have you ever owned Meta stock? Any thoughts on this stock? Yeah, we owned Meta in Profits Unlimited when I was there, I believe in 2019. We sold out of Meta. When Meta crashed, I think it was in 2022, I think we put it into the ETF, model portfolio, the GBC 100, and then we sold out. But I mean, it's very difficult to buy into a stock that looks like this. Yeah, I mean, let's see here. Yeah, I mean, that's just gone from 87 to 725. It's very difficult to buy a stock that has just done that. So, I mean, is it still a buy? It's difficult to say yes. I mean, let's just see. Meta. Meta is 1.8 trillion in market capitalization. The price to sales ratio is 11, which, it's been much higher. It's been as, then let's look at quarterly growth. Their quarterly growth for the last 6 quarters, very solid. 11 times sales is not expensive for a company of its size growing at 20%, 20% every quarter. If it can keep doing that, if it keeps doing between 15 and 25%, it'll probably keep going up. There will be there will be a buyer that's probably willing to pay 12 times sales, probably 15. I mean, heck, Palantir sells for, let's just see, what do they sell for? 75 times sales, maybe? And I was worried. Yeah, 97 times sales. 97 times sales. Palantir sells for 97 times sales. Is Meta going to sell for 97 times sales? I doubt it, but it's definitely a 20% growth for the last 6 quarters. The kind of business that they are, which is about advertising, etc., they're not like a cyclical business. It could go higher. It could definitely go higher, but I don't think I'm going to recommend that in silver tier. I mean, it's such a large company. I don't think that's the kind of thing that people are looking to get from me, but it definitely could go higher. But that's not financial advice. That's just my viewpoint. Doc here about 3D system relating long-term for positivity as Senseonics. Yeah, and 3D systems is also nearing that point where it starts to go up. This is 3D systems chart for the last 10 years. Sorry, last 5 years. And you can start to see the beginnings. I'm just going to move this to a 1 year. You can see that the bottom was out in September. And we are now starting to approach the making of new highs as people come and start to price out. I believe that the tariff war will be good for 3D printing stocks, 3D printing as a technology, as people bring back production to the United States, is going to go through a different process than 20 or 30 years ago. And I believe that 3D printing is one of the central trades for reshoring, tariffs, and the bringing back of production from around the world back to the United States. Stratasys, which is the peer of 3D printing, has taken off, and they are beginning to report improvements in their business. Generally speaking, when one company in an industry reports improvement, it's not long before the other companies start to do it as well. And we are seeing just generally the bigger 3D printing companies all starting to move up. So I believe that, we will see breakout, I think probably second, third quarter in 3D systems this year. All right. Telefax. I do not know Telefax. All right. I'm about to get a package here, so I'm going to have to actually walk away, but I do not know Telefax. Teladoc, I went through earlier, and Teladoc and UiPath I talked about in the Substack earlier in the live stream. What is a good soft commitment for ETF? I mean, we need somewhere between 20 and 30 million to launch. So I think we're up to about 7 million. Okay, I have to go. Problems of live streaming. My bell is about to ring, and I have a delivery coming. So I have to go. If you want more information about the ETF, you can go and check this site that B has put up. Oh, they didn't ring the bell. That's a good sign, but I thought I was going to have to go. You can check it over there. Can you talk about the ETF here? I mean, the ETF is an idea that I had because of a lot of complaints from people like Paul. It is so difficult when you have 50 or 70 or 90 or 150 stocks to go and equal weight them, to monitor them, to buy them, to sell them, to take profits. So if you have everything in an ETF, we can just sort of you could buy one thing and it would own pretty much, most of the stocks. And that way you just own the ETF and you pay, the ETF has a fee that we would earn. And you're just invested in that. And you're just tracking a one stock, sort of like the S&P 500. You're buying 500 stocks, but you just have one ticker symbol, SPY. So the ETF would give you access to how many ever stocks we put into the ETF. Right now we have a 100. But you just it makes your life very simple. You essentially get the vast majority of the movement of being in this strategy of innovation, opportunity, growth, innovation. All those stocks will put in there, and you get it all in one ticker symbol, one stock, and you just own that. It also allows us from as managers, for example, one of the things that I have to do with a subscription service is we got to take some profits from time to time to rotate, because we can't have so many stocks. So sometimes we may think there's more upside over, let's say, another couple of years, but they're okay, I got to, balance that against okay, people want some amount of action, right? They want new trades. So you got to sell. If you're going to sell, what are you going to sell? Well, to take a gain, you have to sell something with a gain. So sometimes you end up selling things that in hindsight you wish you kept. With an ETF, we can sort of, because we've got, everything is, in a much larger portfolio, we can stay longer in things and allow them to, generate much larger gains. So that's the basic idea, to make it more convenient, to allow things, so sort of a longer sort of a lead and runway. And then obviously for us, it would be a second revenue stream for ATG Digital. Joanne says, great to see you back. Been following you for years. Do I like Shopify? Just want to make it clear that I have been here on YouTube pretty much since Banyan Hill terminated my contract. I mean, I've been doing live streams for, I guess it's been like July 6th is when they notified me. September 6th was like the official date where I was cut. But I've been here. But do I like Shopify? Yes, I do. It is in our silver tier. And if I had to choose one stock to buy, yeah, I've answered this before, which is that I have gotten so much grief and so much criticism from people who have gone and buy one stock because I've said, like, even in answer to this question, like, Paul, you told me to do this and it went down. So I'll say you need to own a portfolio, and and I think like I want to avoid telling people to go into one stock, even if it's people say, well, I don't really mean that that's in there. I'll say, we covered a lot of stocks in this live stream, and go read the Substack where we talk about a lot of different ideas, put together a portfolio, of stocks that you see promise in. Have some allocation strategy. We obviously recommend equal weighting, but there's not a single stock that, there's always going to be a lot of different companies that have enormous upside. And obviously in answering that question, people usually oftentimes, if they agree with you, they'll go make outsized bets, which I think causes problems for everybody. So I'm not trying to dance around the question, but there's plenty of picks in the Substack and even in YouTube videos. So go please check those out. I know you, Michael says, I know you no longer hold BTF. I truthfully don't even know what BTF is anymore. I don't think I have no real recollection, truthfully, of owning BTF. We may have done this at some point in time, maybe in when we were writing about it in the free e-letter, but I mean, I think this is I don't really know anymore what this is. This is the Bitcoin strategy ETF. I don't know what Bitcoin. I think this is just the Bitcoin ETF now, and if that's the case, then it's just going to go up and down with Bitcoin. It's not going to be any different than any other Bitcoin ETF or Bitcoin in general. So that would be my view on that. Thomas says, I've recently purchased BFLY, which is the Butterfly Network. I punched that in wrong. This is a similar-ish company in a similar stage, if you will, of sort of like development. They're like a little bit further along the curve than Senseonics. And yes, their product is gaining traction. But just remember, these are small companies, and a small company, again, is going to have more challenges. I mean, they can always miss a quarter. And as the stock price goes up and they start to, trade at higher valuations, there will always be somebody who's like, this is all over. And, they can drop 15 and 20% like that. All right. So just be prepared that small companies have greater volatility, more unexpected events, and on some level, greater risk. And then there's always obviously the possibility that they need money and they're going to sell shares. And you should never be surprised or shocked by that. But Butterfly Network is in diamond tier, and we still like it. BITF, yes, BITF, which is the futures. Yeah, the BITF is the futures ETF, and essentially that will track the Bitcoin futures, which over time is going to approximate Bitcoin's returns with a slight lag or slight being ahead depending on the position of the Bitcoin futures market, which is that it can be in something called backwardation or it can be in contango. So depending on that, it will be slightly ahead or slightly behind, but approximately over time, if you own it, it'll give you pretty much the same returns. We got some more questions here. Hide that. No. I'm having trouble. Okay. PJB says, do you see any companies developing in the self-driving trucking space? Yes, we have Aurora Innovation, which is in the silver tier, which is working on self-driving trucking. We had a company that went bankrupt, which I had recommended, which many people had bet big on, which of course now I'm blanking on, but it was a Cathy Wood company famously, and I also put it into the portfolio. It didn't do very well. Now we're down to, at least in terms of publicly traded companies, one, Aurora Innovation. I'm not sure, Hansel, what I talked about selling a put, not buying them. Selling a put on what? I'm not clear what you would be selling a put on. Is on Senseonics? Liz, always good to see you. Like being in Paul's mind. Well, it would allow us to have like a little, like a fund that we could put as many of your ideas as we could that were liquid relative to the size of the fund, and give all of you an easy, convenient way to invest in our style of investing, and make it super easy to do that. ST Progress investors, a regular buy STRK. If you want dividend income, yes, you can, but I would not be buying STRK, which, by the way, is the MicroStrategy preferred stock for a lot of upside. That is designed to extract money from the preferred stock market, so Michael Saylor and Strategy, not MicroStrategy, can buy more Bitcoin. So that is, they're using STRK to capture liquidity from the financial markets to buy Bitcoin. We will not be recommending STRK because we want big upside. So we do own Strategy, which used to be called MicroStrategy, in the gold tier. Probably says, thank you, Paul. Love you with mass tonnage. That's hilarious. We have been on so long that the app is starting to lag. Why is PayPal hurting lately? They announced their results and they lagged the forecast, and the stock sold off. That's the answer. So anyone that was, let's get this up here. Anyone that was holding it, you can see it made new highs and then it has sold off. I would say that just kind of like, there's still like a lot of people that own PayPal at these kind of prices. So this is going to take a little bit of time to get back, unless they start to show significant growth that is well above what people are currently assuming. If they start to show 20-30% quarterly growth, yeah, you'll start to see the stock move up. But at this point in time, given where their growth rate is, which is more modest, their sellers willing to come into any slowdown. But it still remains that them along with XYZ, which used to be SQ, which is called Block, are like the two digital banks that are out there to replace, the old school banks. When will Mara bounce? We need Bitcoin to stay well above $100,000, and for the profit margins on mining Bitcoin to be somewhere in the 15 to 20% range, which will move estimates higher. Now, as short-term speculators come to bet on the quarter, they're surprised, they bid it higher, and now starts the movement higher. We just have not seen that kind of environment yet. Bitfarms. Bitfarms is a stock, which we, I just want to make sure I say the right thing here. BitDeer. I'm just looking to see if we own Bitfarms anywhere. BitX, BitO. We do not own. I mean, you're putting up Bitfarms here. It looks like all the other miners. I mean, they've gone kind of like, there was a big spike earlier in 2024, and they've gone pretty much nowhere in the past. And what they need is the same thing that Marathon Digital needs, which is that the Bitcoin price to spike up, for their margins to go up, and that will move estimates, forecasts higher. Now, when speculators come to bid the quarter up, they bid it higher. I know a little bit about SUI crypto, but my general view of crypto is like, well, I mean, I don't know any specific purpose behind SUI that I can think about. We own a number of DeFi crypto. I'm wedded to the idea that crypto should have some utility, and in the diamond tier, we own some more speculative crypto, but even there, I have mostly a sort of like a viewpoint that crypto has to serve some kind of purpose. And there are a lot of blockchains out there. I mean, we've got so many blockchains out there. It's completely possible it might be successful. We have not put it into any portfolio. I've seen it recommended. Other people have told me about it. But on some level, I have crypto fatigue from so many different blockchains that people, everyone has their favorite: Caspa, SUI, others that are out there, and it's really hard to differentiate a lot of them. If you want regular ideas, stocks and crypto, completely free. The Substack, which has really done a pretty good job of highlighting stocks that have moved up: Fannie Mae, Teladoc, others. Especially recently. Definitely worthwhile as a free subscription. And also, like, for just in case anyone's wondering, we don't market to you. We don't send you anything. You'll just get the email with the Substack. Where do you see interest for the rest of the year? Will Jerome cut or stay on hold? And is your Bald Man Speculating podcast on pause? Where I expect that somewhere before the end of this year, we'll see a cut, maybe, or two. But the entire premise of like the stock market running on interest rate cuts is gone. I mean, is not something that, like anybody should be betting that is going to change anything. I think as inflation moderates itself, we'll get a cut, maybe two. I think like over the next, I think in 2025, so we'll get maybe 0.5%. And then in 2026, we might get another 0.25%. In other words, it will be very much depending on inflation sort of like starting to come down to that 2% point, which would allow them to do it. But the idea about everybody waiting for interest rate cuts, I'm not in that camp, and I don't expect very much. I think the interest rate cycle, has, for the very, very long term, has turned. In other words, we've seen this big jump from 0 to about almost like 5%, and we're tracking back down. I think on the track back down, we'll probably get to maybe 3%, maybe 3.5%, and that's all I think we're ever going to get. And then from there, I think we'll just like be in a range up and down for a long period of time. That's my view. All right. We have successfully done the longest live stream in this channel's history. Thank you all for attending. I hope I was able to answer your questions and you found the live stream to be useful. Definitely subscribe to the channel. Put the bell to notify. I will come on and work online from time to time, especially if there's major events on our investments, Tesla, Bitcoin, Ethereum, anything that's going on. And then follow me on X, the Substack, obviously in there. Oh, and I didn't answer your question about Ballman speculating. It is not on hiatus. It has always been sporadic. I tend to like do the work on it. Like I come up with 2 or 3 ideas, I put it out there, and then I do it because between ATG Digital, the free content, we have a lot going on, and Ballman speculating tends to be like sort of like the last thing I put my energy towards. So it's definitely not on hiatus. I have topics that I have. It's just I got to find the energy and time to do it. All right. Thank you all for attending this live stream. Give us a smash the like button, subscribe, the bell, and I'll be on again next Tuesday. Happy Valentine's Day to all of you. This is Paul saying thank you and goodbye.